Hey everybody, Nathan here with SouthernIndianaMortgage.com, and I want to put together a short video to show you how you can tap into your home's equity to possibly pay off some debts or even get cash that you can use for any purpose by using your mortgage. So I want to talk about that just for a little bit. So basically, you may see some different advertisements on TV that talk about using your home equity for a debt consolidation program, or to use that to be able to pay off credit cards or things along those lines. And that's what I wanted to talk to you about this evening, to show you how that actually works. So for example, the biggest thing that comes into play with all of this is actually, obviously the equity in your home. And if you're not sure what the equity in your home may be, kind of think about it like this. Basically, the equity calculation is the value of your house minus the amount that you owe equals your equity. So, for example, if your home is worth, let's say, $200,000 and you only owe $150,000, then that means your equity in that home would be right around $50,000. Now, that doesn't necessarily mean that you can use the full $50,000, for a debt consolidation, refinance that we're talking about this evening. It kind of depends on the loan program. So, for example, if you have a VA loan, then we could absolutely use up to $50,000 in equity if you qualify. So, for example, if your credit scores are good, as long as the appraisal is good, and if you qualify from an income standpoint, VA allows you to do what we call 100% of your home's equity to be able to use towards anything that you would like, whether it's a credit, pay off some credit cards, student loans, car loans, personal loans, medical bills, home improvements, if you're wanting to do something, with your homes to make it, maybe build onto it or anything along those lines, or even for cash purposes. You can use the money to set aside, to invest, or use whatever you need, those funds for. You can do that. So with VA, you could actually borrow up to $200,000 on that program if you qualified. Now, there's a couple other options that if you're not a veteran, that could also work for you. For example, FHA will allow you to do 85% of your home's value, basically of your home's value, and you can use that amount to be able to pay off some of those debts or these things that I just mentioned. So, for example, 85% of $200,000 would basically mean that your loan amount could be up to $170,000, which means that would leave you with $20,000 of your equity that you could use. And again, that $20,000 can be applied to any of these things right here that we just outlined. So again, you have that option with an FHA loan of the 85%. Now, the other option I want to mention is a simple conventional loan, which you could do up to 80% cash out on that. So that would be $160,000 in this example, which means you would have about $10,000 to work with from an equity standpoint that you could tap into. Now, you still have your full equity there, but you'd be using, basically that, $10,000 for that amount. But again, you can use any of that. Now, those numbers work with anything. So as far as, if your home is valued at $300,000, but you only owe $200,000, you've got some plenty of equity there to use. And, and so it's definitely can be a good option for you. Now, you may be thinking, hey, I've got a really good interest rate on my first mortgage right now. I owe $150,000 on it. I've got a great interest rate, and especially coming after the past few years that we've had in a low interest rate environment, you may very well have that. But when you think about that in comparison to what your credit card interest rates could be, we've seen, that interest rates could be anywhere upwards to 20% on credit cards, or 26%. Or student loans that seem to never go away. Think about how nice it would be to pay off a couple of student loans and get those out of your, off of your books. You wouldn't have to worry about those. Auto loans, sometimes you can have some good interest rates on those. Sometimes you don't. Just kind of depends on your situation. Personal loans, if you've got loans with, finance companies, those can be very high interest rate loans. And then, like I said, they can be similar to credit cards from a payment standpoint and what you would have there. Medical bills, if you're trying to keep some medical bills from going to collections, you may want to use some of your home equity to pay those off. Home improvement, and then also you can tap out, with cash out some cash as well. Now, another question we have a lot is, should I just do a home equity loan instead of refinancing that? home equity loans are a great idea. They can work perfectly depending on your situation. But it seems like that in the past that I've seen is people will get home equity lines and eventually they'll end up flipping that over to a regular 15, 20, 30-year mortgage and eventually not use that home equity line like they had planned. So it's a good option if you want to do that, but it can save you a couple years on or basically shave off a couple of years off your mortgage if you decided just to go ahead and do a permanent loan now, unless you just were 100% certain that you thought you would leave that home equity line intact for that timeline. So all of these things are great options, but then another question we get a lot is, okay, I only owe, X amount of dollars on my credit cards. If I roll this into my mortgage, then I'm stretching that out over 30 years or 20 years or 15 years, whatever your term is. And that is correct. So when you roll any of these debts in, you're adding that to the balance of your mortgage. And then that's going to, basically the stretching that out causes those payments to be lower, along with having the interest that is, a smaller amount as well, as far as paying that in comparison to those. So you do stretch it out. But what I always advise everyone is everyone has a different situation. If you're strapped for cash right now, that equity doesn't do you any good on paper. If you're having a hard time month to month with some of these bills and you've got $50,000 or $60,000 in equity in your house, yes, that's a nice luxury. But if it would give you some breathing room from a payment standpoint each month and from a bill standpoint, it may be a good idea to go ahead and take advantage of the opportunity now while you can. Another thing to keep in mind is over the past few years, home values have risen quite a bit. But if you remember just 10 years ago, around 2008, a lot of home values had dropped. So, for example, home values at 200,000, could have dropped down to 160 or 150 at that time, and that equity evaporated. So whenever that happened, people did not have access to that equity like we do currently, where values are higher, and you may qualify for something there. The other nice thing is, even if you didn't want to use your equity for that, if you may want to double check and see what your equity is, definitely check with us and we can give you an idea of what you're looking at from an appraisal standpoint, because you may be able to eliminate your private mortgage insurance. So if you have an FHA loan and you want to get rid of your mortgage insurance, just that alone, depending on your loan amount, could be anywhere from $50 to $250 a month, depending on what kind of program you had and your loan amount that you had there. So anyway, so if you're thinking about possibly using your equity to combine some debts and consolidate your loans, definitely give us a call. We'd love to help you with that. You can reach me or reach me on my cell phone. The number is below this video. You can also check out our website at southernIndianaMortgage.com and just reach out to us. We're happy to work up a quote for you to let you know exactly what you can save based on your home value and how much you can save monthly. We recently just did a debt consolidation program like this, to where we were able to not only save our clients some money here, basically a little over $380 on their monthly amount that they were able to pay off, but we were also able to take their 30-year loan down to a 15-year loan, which was amazing for them. Think about that savings. They've been paying on that loan for a while, but now all of a sudden they've gotten rid of some debts. They were able to knock this down to a 15-year loan, so they've shortened the time that they're paying on that mortgage, and they're saving almost $380 a month off of their payments that they have, which is just extra cash flow for them, each month that they have to work with. So anyway, we'd love to work up a quote for you. Reach out to me. You can text me, call me, or you can find me on Facebook or on our website. We'll be happy to work up some numbers, see if we can help you out. There's no obligation for that, and then we can go from there. So reach out to us, and we will talk to you soon. Have a great day. Thank you.